Kevin in Colorado, aka your Tesla pilot, and we are talking about
Tesla.
That's right. So, new day over the weekend. Battery day is behind us. The S&P 500 inclusion snubs behind us. So, what is going to go on with Tesla stock? That's what we're discussing today. Here in a moment, we're going to actually watch about a 7-minute video, which I think is a great recap from the Wall Street Journal about Tesla and where Tesla is headed. But more specifically, we're going to talk about the short-term stock market and the choppy waters from now and up until the election day, and what I believe is going to happen with Tesla stock. Active management, active trading of your actual portfolio. Obviously, still a bull on Tesla, long-term investor on Tesla. In the short term, I'm going to try to maximize some profits because we're talking about money, right? So we've done pretty good making some money this year off Tesla stock. We're going to see if we can capitalize on that over the next 30 days going forward. Overall, in the macro environment, we have our first debate between the two presidential candidates, between Joe Biden and President Trump, happening tomorrow night. I think that's going to be a telltale sign of kind of where the market's headed in these choppy waters coming over the next 30 days. A lot of uncertainty, two different types of policies, right? Whether you believe into the Biden green energy, which will help possibly Tesla going forward, or I think Tesla will be fine in either direction. Under Biden or Trump, the company is phenomenal, is going to be fine. But the overall macro environment with the higher tax rate under the Democratic plan, going from a 21% tax rate to a possible 28% tax rate, or even low 30s for company tax, that's going to have ramifications in the market as well, as those companies look to obviously turn a profit. And when a company is looking to turn a profit, usually they take those additional burdens, special tax burdens, and they just simply raise the rates of the product or service they're selling and pass that burden on to us, the consumers, and the end users, us, and we end up paying that money, which hurts our bottom line as well. I'm also going to discuss just a little bit about what I call speedboat trading, right? You and I, as retail investors, we have a lot of flexibility. We can be fast and nimble, where a lot of the institutional investors, they can't. They have to go in there, report, buy huge chunks of a company, whether it be a Microsoft or a FANG company, Apple or Tesla in this case. They buy big positions in these companies, and they have to disclose when they sell, when they buy, and they can't just buy and sell within 24 hours. You and I, we can be like little speedboats off that big institutional well floating through the marketplace, if you will. We can come and take a small little bite off the well and run away. And that's kind of my strategy over the next 30 days during these choppy waters, is to look for opportunities like I saw on Friday. I bought 364 shares of Tesla at a price of $406.88 per share. And I sold less than 48 hours later in pre-market trading this morning, being Monday morning, at a price of $426 per share, netting me a quick $7,000 gain. Not bad, since I didn't work over the weekend. That's more than I make in a week. Of course, I'm also trading in a tax-deferred account, so I'm not paying capital gains on this trade. My buddy, shout out to Jerry, we were talking right after battery day. I said I thought we'd go down to just right about 355, 350. And unfortunately, I got transferred to a new shift, and I was asleep when it actually hit 355. I was like, oh man, you're like a prophet. You saw that coming. So no, I saw the pullback coming and the opportunity presenting itself. Unfortunately, I was asleep and did not get in at the 355 level, which I think would have been a pretty fantastic level. But I think we're going to see an opportunity to get close to that again here in the future, as I believe the macro environment will start bringing down the overall momentum of some of these tech stocks, and we might see just a little bit of a dip and a reason for opportunity. And one of the reasons I'm looking at that as well when we talk about these dips and opportunity is because I have a nest egg now that I'm trying to actually protect. I don't want to take my nest egg and expose it to the entire market at one time. I want to protect that nest egg, so I'm taking chunks or pieces of it and exposing it, which minimizes my risk, but also minimizes my upside, if that makes sense, especially during these, what I said, very volatile times I think that we're going to see over the next 30 days. And some of that volatility comes with things like, wow, What's going to happen? Are we really going to get a second wave of COVID coming from the UK? If so, that should be hitting us in the first week of October. So that's one thing to think about. What happened in the history last time the COVID hit us back in March of this year? We saw the overall macro environment pull Tesla down to that 300 level. Right now, we're at that 420 level, which Tesla loves, that 420 resistance level. We showed prior to that about 369 resistance level, 355 resistance level. So we're going to have resistance at 420. Will it hold it? We'll see that come up here in the short term. We'll know that next week or so if it actually is able to hold that position as well. Or will a second wave hit and drag Tesla back down? And remind you that we just had a split, right? A 5-for-1 split for the 420 level times 5. That's $2,100 stock price for trading right now for Tesla, which I think is just a little bit high. Not in the long term. Obviously, I believe in Tesla, but the valuation as Tesla as a quote only car company, which we know it's not, people are still going to use that. The analysts are still going to use that. The price targets coming out that are going to be revised are still going to use that, with the exception of ARK Investments and Miss Kathy Woods. I would imagine in the next 2 to 3 weeks, we're going to see a revised price target from ARK Investments that's going to surprise a lot of us. So can you catch that wave of that coming up? I imagine she's going to start bringing her price target from that 1,400 PT probably up to a $2,000 price target. What do you think? What's your plan the short term? Are you just going to ride out the waves and miss some opportunity and still catch the big wave that comes across? Or are you actually actively trading the stock right now? Obviously, another huge thing we have coming up here is the Q3 or quarter 3 delivery numbers that should be out here the first week of October. Depending on who you talk to, between 130, 140,000 new vehicle deliveries from Tesla. That's going to be big for the stock as well. In the short term, I don't think it's going to have a long-term effect because we're still looking for that on target 500,000, 500,000 deliveries from Tesla by the end of 2020, which I believe they're definitely on schedule for, which is amazing. And then eventually still, S&P 500 has to come eventually, but we're going to have another gap earnings, right, with those credits, those clean energy credits that Tesla gets. And we also have the concern of Elon Musk's compensation package and what effect his millions of capture will have on the Q3 profit line for Tesla and its implications for the stock price. All these exciting things are coming up.
I don't think any other stock has captivated investors on Wall Street or Main Street the way Tesla has. It's just become one of the most controversial names and one of the most watched names out there.
This summer, Tesla became the most valuable auto company in the world, surpassing Toyota and claiming a market cap of over $190 billion before continuing its climb.
The electric vehicle maker's stock speeding this year.
Musk's wealth skyrocketing thanks to a surge in Tesla shares, making him wealthier than Warren Buffett.
But the company's fundamentals don't seem to explain the rise. For example, Toyota sold almost 25 times as many vehicles as Tesla did last year. Instead, the rally has been driven by investor enthusiasm for CEO Elon Musk, in a belief by some that in the future, cars everywhere will be powered by batteries, not gasoline. Here's how Tesla became the most valuable automaker in the world. Tesla developed its first car in the early 2000s, but to follow its ballooning share price, a good place to start is last fall.
In October 2019, Tesla reported a surprise profit for its latest quarter, and that just sent its shares soaring. Just a few months prior, Tesla shares were hovering near a 3-year low. The prior year, Elon Musk had tweeted that he was going to take Tesla private at $420 a share, and that landed him in the crosshairs of regulators. He'd also kind of had a history of missing financial targets and car delivery targets. So that's why this surprise earnings beat was a really big deal.
Amid the rush of investor optimism, in mid-November, Musk held an event in Los Angeles to reveal Tesla's Cybertruck.
What he did was he unveiled this pickup truck that looked unlike any other pickup truck we had ever seen before. And he boasted that it was really, really durable.
At the event, a Tesla employee threw a metal ball at the window to show its strength, but ended up breaking the glass.
I should say also, we're going to be offering rides in this all night. Yeah. Don't mind the glass.
The next day, shares fell more than 6%. But amid press around the event, the stock quickly recovered, and on December 23rd, it surged past $420.
The reason that 420 mark is kind of a milestone is that, that was kind of the tweet that landed Musk in the crosshairs of regulators.
The SEC later said the tweet was a reference to marijuana culture that Musk used to amuse his girlfriend.
The shares crossing 420 later in the year, it was kind of a victory in that sense.
In the following weeks, Tesla had a string of wins. The company said it met its delivery goal of 360,000 cars for the year. And less than a year after breaking ground at its China plant, the carmaker met its objective for Model 3 production at the facility and held a press conference to celebrate deliveries of China-made Model 3s to Chinese customers.
Many people view China as the world's biggest market for electric vehicles. So in order for Tesla to kind of make this journey from, just a small startup to a global behemoth producing electric cars, bullish investors say that it needs to target that market. So this boosted expectations for the coming year.
The investor momentum continued when on January 29th, Tesla posted a profit for the second quarter in a row. On the earnings call, the company said it was well on its way to producing its next car, the Model Y compact sport utility vehicle. And it told investors the business should be profitable going forward.
So this was around the time that Tesla shares really just started to go parabolic. And you saw Wall Street investors, Main Street investors kind of all piling into Tesla shares, Tesla options, and it just kind of became this huge frenzy around the company.
But not everyone was betting for the car company.
The fascinating thing about Tesla is that despite its kind of meteoric rise in the stock market this year, it remains one of the most popular shorts. So that means it's a really popular bet for investors who think that the shares are going to absolutely plummet. When the stock goes up, that's painful for a short investor. That means that they're losing money. So some people can't hold on to these money-losing positions for too long, so they have to close out their positions. And sometimes they do that by buying Tesla stock. In this kind of unusual twist, you have investors who think the shares are going to go down, actually helping to drive it up.
But this stock run-up was stopped short in March. Despite investor enthusiasm, Tesla was not immune to the market effects of the coronavirus lockdowns. That month, California issued stay-at-home orders, leading Tesla to suspend production at a factory and interrupting the company's ramp-up for its newest vehicle. The stock fell in March and then quickly bounced back as the market started to recover. At the heart of this downturn, the Federal Reserve enacted a massive stimulus plan to buoy the economy, fueling a broader recovery in the stock market that also lifted stocks like Tesla. On April 29th, Tesla reported another profit, the third in a row.
Even through the low of the S&P 500, the S&P was down roughly 30% year to date. And meanwhile, even through that time frame, Tesla stock was up. So despite a recession, a global pandemic that could crimp demand for cars, Tesla stock has still been resilient this year.
Then on June 10th, investors pushed the automaker's stock past $1,000 a share for the first time ever, after Musk told employees it was time to begin production on the company's all-electric semi-trailer truck. By July, Tesla became the world's most valuable car maker, overtaking Toyota. And on the 2nd, Musk taunted the short sellers when shares opened above $1,200 for the first time after Tesla deliveries beat expectations and investors anticipated the company's inclusion in the S&P 500 index.
In order to be considered for the S&P 500, a company needs to deliver a cumulative profit over 4 consecutive quarters, including the most recent. So even before Tesla's most recent earnings report, a ton of investors were anticipating, hey, we think it's going to be profitable this quarter. We think it's going to be in the S&P 500, and that drove the stock even higher.
On an earnings call on July 22nd, Tesla said it hit that goal, defying the Wall Street bears who expected a loss.
We were able to achieve our 4th consecutive profitable quarter, and although the automotive industry was down about 30% year over year in the first half of the year, we managed to grow deliveries in the first half of the year.
If you bought 10 shares of Tesla last June, in June 2019, it would have cost you a little more than $1,700. If you held on to that investment through late July, it would have been worth more than $15,000. Bears still say that the stock is going to go down. They don't think that Tesla will bring electric vehicles to the masses.
Well, that'll be a wrap for today. I'd love to hear from you in your comments down below. If you do like the content, please consider subscribing to my channel and sharing it with your friends and family. We'll see you tomorrow for more talking about
Tesla!
That's right.